Welcome to our second edition of Money Matters. Today we're going to talk about the different types of financial institutions and the bailout money. The Federal Reserve is the United States central bank. It controls the flow of money in and out of banks and maintains the stability of the financial system. All national banks must be members of the Federal Reserve. Membership is optional for state banks. Thanks to deregulation, banks can offer insurance and investment products such as mutual funds and IRAs. There are commercial banks, national charters, state charters, state savings institutions, different types of state. There's a federal charter and a state charter, and there's an all-state charter institution, the Federal Reserve. Now, national banks are chartered, regulated and supervised by the Office of the Comptroller of Currency, headquartered in Washington, D.C. National banks have national or NA in their name, and supervised by their state's banking division. The Federal Deposit Insurance Group, FDIC Corporation, is the federal regulator of state chartered banks that don't belong to the Federal Reserve System. So they got you covered one way or the other, supposedly. Thrifts have come a long way from the days when they only offered savings accounts and mortgages. Today, thrifts offer checking accounts and provide businesses consumer loans as well as mortgages. That was part of our problem, stock ownership, or by their depositors, mutual ownership. They can either be federal or state chartered. While there are some differences between savings banks and savings and loan associations in the terms of how they are set up, Congress has removed all differences between federally chartered facilities as to the kind of loans and investments they can make. The Office of Thrift Supervision is the primary regulator of all and many state chartered thrift institutions, which includes savings banks and savings and loan associations. Credit union, cooperative financial institutions. Traditionally, people with a common bond form them. They work in the same industry or are members of a particular workers' union, share the same religion, etc. Today, the membership restrictions significantly. Many credit unions simply require that you live or work in a certain geographic area in order to become a member. The vast majority of credit unions in the United States are federally chartered or state-chartered credit unions that are federally insured. Credit unions frequently offer higher interest on deposit products than banks or thrifts, and they have a tendency to offer loans at lower rates. Credit unions are exempt from federal taxation. The National Credit Union Administration is the federal agency that charters and supervises federal credit unions and insures deposits in federal credit unions and state credit unions that are federally insured. Deposits of member institutions are insured up to $100,000 per customer, individual, or business. The National Credit Union Administration, NCUA, is a federal agency that charters and supervises federal credit unions and insures savings in federal and most state chartered credit unions across the country through the National Credit Union Share Insurance Fund, NCUSIF, a federal fund backed by the full faith and credit of the United States government. This is similar to the FDIC. There are online banks. Online banks, which usually have no brick and mortar branches, first gained attention by offering higher rates on deposit products than traditional banks. While it's still true to some extent, the rate differences are not as significant as in the past. Most bank websites have an About Us page that describes the institution. Look for the information regarding their official name, their charter, address of the bank's headquarters, and information about its insurance coverages from the FDIC. The FDIC warns that not all banks operating on the Internet are insured by the FDIC. Many are chartered overseas. If you choose to use a bank chartered overseas, it is important to know that the FDIC may not insure your deposits. Check with your bank or the FDIC if you are uncertain. We have heard a lot in the news about the failing ailing institutions. However, did you know that AIG, American International Group, Incorporated, a world leader in insurance and financial services, is the international insurance organization with operations in more than 130 countries and jurisdictions. AIG companies serve commercial, institutional, and individual customers through the most extensive worldwide property casualty and life insurance networks of any insurer. Less than a week after the federal government committed $85 billion to bail out AIG, executives of the giant AIG insurance company headed for a week-long retreat at a luxury resort and spa, the St. Regis Resort in Monarch Beach, California. Congressional investigators revealed recently. Are we investigating ourselves? J.P. Morgan Chase Manhattan Bank started in New York and opened its first branch in Beirut and Lebanon in the 1950s. In 1990, they played an active role in Mexico and helped restructure $50 billion in medium and long-term commercial bank debts. In 2007, they opened a branch in Dubai, India, the United Arab Emirates, Brunei, Saudi Arabia, and they're expanding their long-term presence in the Middle East and North Africa. Then they bought and merged with WaMu, Washington Mutual. Merrill Lynch merged with Bank of America. Should we even talk about Merrill Lynch's ex-leader, John Thang, and his history? We're going to follow the paper trail just a bit. He preceded Merrill Lynch with 24 years at Goldman Sachs before moving to run the New York Stock Exchange. He claims the responsibility for selling off Bear Stearns and Lehman Brothers, thus saving Merrill Lynch from that exposure. I'm thinking that maybe it's time for a new kind of financial institution. The banks need to come up with incentives for U.S. citizens to trust them with their money and keep their money safe. The government needs to ensure that our money is worth its weight in gold, or at least it's worth enough to do what we need to do at home and globally. Time is money, and money matters. The FDIC is often appointed as a receiver for failed banks. This includes information about acquiring the bank, if your accounts and loans are affected, and how vendors can file claims in its receivership. We will have a list of banks that follow in the text. I want to point out that Washington Mutual was cited in closing date September 25th, 2008. It shows 2 branches, and the updated date was January 13th, 2009. There are lists of banks on the FDIC that are currently under investigation, that will be closed, that will be merged, and this is public information, people. You need to check it out because time is money and money matters. Thanks for watching.